9 Steps to Becoming a Legendary Trader, Part 2. Welcome back to the journey toward becoming a legendary trader. If you've made it through the first 4 steps, igniting your drive, embracing losses, seeking truth, and mastering emotions, you're already ahead of the pack. Those steps built the foundation, a mindset forged in self-awareness, resilience, and discipline. Now, we dive into the final 5 steps, where you transform that foundation into a system, refine it, and ultimately become one with the market's rhythm. This isn't about chasing profits, it's about crafting a legacy through deliberate, consistent action. Let's get to it. Step 5, Building a Trading System. You've faced your emotions and found clarity in simplicity. Now it's time to build a trading system, a structured framework that turns your knowledge into repeatable actions. A trading system isn't just a strategy, it's a set of rules that governs every aspect of your trading: entries, exits, position sizing, risk management, and trade review. Legends don't trade on gut feelings or hunches. They rely on a system they trust, tested through fire. What makes a trading system? Your system should be clear, repeatable, and aligned with your personality. Are you a trend follower who thrives on momentum, like Paul Tudor Jones? Or a contrarian, like George Soros, hunting for mispriced assets? Maybe you're a swing trader, like Mark Minervini, capitalizing on short-term price swings. Whatever your style, your system must answer 5 key questions. Entry criteria: what signals confirm a trade? E.g., a breakout above resistance with high volume or a candlestick pattern at a key support level. Exit criteria: when do you take profits or cut losses? E.g., a fixed target at 2R, a trailing stop, or a reversal signal. Risk management: how much capital do you risk per trade? E.g., 1 to 2% of your account, adjusted for volatility via ATR. Position sizing: how many shares or contracts? E.g., calculated using Kelly criterion or fixed fractional sizing. Market conditions: when does your system work best? E.g., trending markets for moving average crossovers or ranging markets for mean reversion setups. How to build it? Start simple. Pick one market, stocks, forex, futures, crypto, and one time frame: daily, 4-hour, 15-minute. Choose a strategy that resonates: price action, trend following, or mean reversion. For example, a basic system might be: market, S&P 500 stocks. Time frame, daily charts. Entry, buy when price breaks above a 50-day moving average with a bullish engulfing candle and above average volume. Exit, sell at a 2-to-1 reward to risk ratio or if price closes below the 50-day MA. Risk, 1% of account per trade, stop loss at 2x ATR below entry. Conditions, trade only in uptrending markets, 200-day MA sloping upward. Write your rules in a trading plan. Be specific, no vague terms like, when it looks good. Test it on a demo account or backtest it using historical data. Platforms like TradingView or MetaTrader can help. Expect flaws. Your first system won't be perfect. That's why the next step is critical. Step 6, testing, tweaking, optimizing. A trading system is like a raw diamond, it needs cutting and polishing to shine. Step 6 is about refining your system through rigorous testing and iteration. Legends don't stick with a system that feels right, they validate it with data and adapt it to reality. Backtesting and forward testing. Start with backtesting, apply your system to historical data to see how it performs. Use at least 100 trades across different market conditions: bull, bear, sideways. Calculate key metrics. Win rate, percentage of winning trades. Reward to risk ratio, average profit of winners versus average loss of losers. Expectancy, win rate x average win, loss rate x average loss. Drawdown, maximum peak to trough loss in your account. For example, if your system has a 40% win rate, a 2-to-1 reward to risk ratio, and a 1% risk per trade, your expectancy should be positive. If it's negative, tweak your rules, tighten entries, adjust stops, or refine market conditions. Next, forward test in a demo account. Trade your system live for at least 3 months. This exposes you to real-time emotions and market noise that backtesting can't replicate. Track every trade in a journal, noting entry/exit rationale, market conditions, and your emotional state. Optimization without overfitting. Optimization means fine-tuning your system to improve performance, but beware of curve fitting, tailoring your rules so tightly to past data that they fail in live markets. For example, if you optimize a moving average crossover to work perfectly in 2020, it might flop in 2025's volatility. Keep parameters broad and test across multiple time periods. Ask yourself, does my system work in trending and ranging markets? Does it hold up during high volatility, e.g., VIX spikes? If it fails in certain conditions, add filters, like avoiding trades during earnings season or FOMC announcements. Iteration is key. Legends like Ray Dalio thrive on iteration. His principles philosophy emphasizes constant feedback loops. After each trade, ask, did I follow my rules? Did the trade align with my system's edge? What can I improve? If your system's win rate is too low, tighten your entry criteria. If drawdowns are too high, adjust position sizing. If you're overtrading, add a rule to limit daily trades. Optimization never stops, it's a living process. Step 7, Maturity and Consistency. You've built and refined a system. Now it's time to execute with consistency. Step 7 is where you sync with the market's rhythm, trading like a professional, not because you're flawless, but because you're reliable. Consistency isn't about winning every trade, it's about following your system, day in and day out, without deviation. The power of routine. Legends like Stanley Druckenmiller don't trade on whims, they follow routines. Create a daily trading ritual. Pre-market, review economic calendars, e.g., non-farm payrolls, CPI releases, and scan for setups. Trading hours, execute trades only when your system's criteria are met. No impulse trades. Post-market, log trades, review performance, and note emotional triggers. Stick to your risk parameters religiously. If your system risks 1% per trade, never bump it to 5% to catch up. If your rules say no trading during FOMC, don't sneak in a quick scalp. Consistency builds trust in your system and confidence in yourself. Handling drawdowns. Even the best systems face losing streaks. A 40% win rate system can lose 5 trades in a row, it's statistically normal. Don't panic or abandon your system. Check your metrics, is the drawdown within your backtested range? If yes, stay the course. If not, pause and reassess. Legends don't chase losses, they trust their edge and wait for the market to align. The mature trader's mindset. Maturity means accepting the market's uncertainty. You don't need to predict every move, just follow your system's probabilities. You're not chasing home runs, you're stacking small, consistent gains. A mature trader doesn't boast about wins or sulk over losses, they focus on process. As Jesse Livermore said, the game taught me the game. Let the market be your guide, not your enemy. Step 8, Conquering Final Fears. You're consistent, but one question lingers, what if I'm wrong? Step 8 is about facing your deepest fears, failure, ruin, or irrelevance. Even legends like Jesse Livermore battled these demons. Fear isn't a sign of weakness, it's a signal you're human. Conquering it doesn't mean eliminating it, it means acting despite it. The fear of being wrong. Every trade carries the risk of loss. Even with a 70% win rate system, you'll be wrong 30% of the time. Fear of being wrong can paralyze you, causing you to skip valid setups or exit winning trades too early. To conquer this, reframe losses as data points. A loss isn't failure, it's feedback. Review it, learn from it, and move on. The fear of ruin. Blowing an account is every trader's nightmare. Legends mitigate this with ironclad risk management. Never risk more than 1 to 2% per trade. Diversify your portfolio to avoid overexposure to one asset. Keep a cash reserve for unexpected drawdowns. As Warren Buffett says, rule number 1, never lose money. Rule number 2, never forget rule number 1. Protect your capital, and fear of ruin fades. The fear of missing out, FOMO. FOMO drives impulsive trades, jumping into a parabolic stock or crypto because everyone's making money. Legends don't chase. They wait for their setups. If you miss a move, another will come. The market never runs out of opportunities, but your capital can. Stick to your system, and FOMO becomes irrelevant. Facing fear head-on. Write down your fears. Are you afraid of losing your savings? Looking foolish? Missing the next big trend? For each, create a counter-strategy. Losses, strict risk management and trade journaling. Looking foolish, focus on process, not others' opinions. Missing out, trust that your system will catch the next setup. Meditate daily to stay grounded. Visualize worst-case scenarios and how you'd recover. This mental rehearsal builds resilience. When fear arises, acknowledge it, but don't let it steer the wheel. You're ready for the final step. Step 9, Becoming a Legend. You've built a system, refined it, traded consistently, and faced your fears. Step 9 isn't about a single achievement, it's about embodying the trader's life. A legendary trader isn't defined by a single win or a massive account. It's someone who lives the craft with purpose, discipline, and humility. The legendary mindset. Legends like Ray Dalio or Paul Tudor Jones don't trade to prove themselves, they trade to express themselves. They see the market as a puzzle, not a casino. They respect its complexity, adapt to its changes, and never stop learning. A legend knows. The market owes you nothing. Every trade is a hypothesis, not a certainty. Success is a byproduct of process, not a goal. Leaving a legacy. Your legacy isn't just about money, it's about impact. Mentor others, like Jake from our story, sharing your hard-earned wisdom. Write a trading journal that becomes a blueprint for future generations. Trade with integrity, never cutting corners or chasing hype. Your legacy is the discipline you instill, the losses you overcame, and the clarity you achieved. Living the trader's life. A legendary trader lives intentionally. They balance trading with health, family, and growth. They don't obsess over charts 24/7, they trade, reflect, and rest. They know when to step away, whether for a day or a month, to recharge. They find joy in the process, not just the profits. The final test. Ask yourself, why am I trading? If it's still about quick riches, you're not there yet. If it's about mastering yourself, understanding markets, and building a life of purpose, you're already a legend. The market is your canvas, paint it with discipline, patience, and courage. Final thoughts. Becoming a legendary trader isn't about fame or billions. It's about walking a path few can endure. You've lost money, faced doubts, and wrestled with emotions. You've built a system, stuck to it, and conquered fears. Now, you trade not to win, but to live the craft. That's what makes you legendary. Thank you for joining me on this journey. Share this with someone who needs it, they might be one step away from their own breakthrough. Keep trading, keep learning, and keep growing. The market is waiting.